realtor in Central Florida and you're preparing to list a property for sale, the market changed over last year, as we all know, and you're not sure what to base your pricing on because as an intelligent and informed realtor, you don't want to price in the market that happened before. You want to price ahead of the market, but most of the reports they come, they are 30 to 45 days old. If that's the case, you're in the right place. Welcome into Orlando Market Pulse, February 2026. I am a mortgage broker in Central Florida. My name is Natalia Mann, and my company is called iMortgage for You. And I'm accompanied by Jessica Eckhart with accredited appraisals. Jessica is a residential appraiser. Today, guys, we're going to break down for you all the markets in Central Florida, and we'll talk about specifics of them, where the prices are going, what's happening, so you'll get the knowledge firsthand. And this will be the data for February 2026. So we're going to start this tracker for you. I hope you will get appreciative of this. You use it, you run with it, because this is for you to give a great service to the community of Central Florida. Shall we begin? Jessica, welcome in.
Yes, thank you so much. Thank you for having me. I'm so glad everyone is able to join us and hopefully they get a lot of value out of it.
Let's dive right in. Jessica, I have a question for you. From the start of this year, many of my realtor partners shared with me that they see uptick of the activity for the buyers in Florida. And actually, I start getting more calls myself for mortgage. So is that something that you see on your end?
I think in certain pockets, yes. I think there is activity that's happening. I do think there's, on my end, which is after things are under contract and they have the appraiser come out, it's not as active as we'd all love it to be, but I think there are many conversations happening. So that is promising. I think as we ramp up, into February, March, I think things are going to start, more activity historically starts within the first quarter. So I'm hopeful.
I think like people start following their resolutions for the new year, and I hope that they come true for all of them, actually. Let me ask you first about the luxury segment, because this is the market that I think the least understood generally. And this market is mostly concentrated in southwest of Orlando and Dr. Phillips and Windermere and parts of Winter Garden, even Agatha. So these areas, I know they are very difficult to price because there are not that many cookie cutters. Many of them are not alike. So what are you seeing about this market?
Yes, the luxury market, so anything is over $1 million, the activity becomes very location specific. So actually, in order to maybe help our listeners and people who are watching understand the Orange County market, I actually created a little slide deck that I could share that kind of helps frame Orange County and then breaks it into different quadrants. Maybe we can walk through that and then we can, because I actually have a slide on the luxury market. So we can work through that. Shall I share my screen?
You want to give like overall the state of the market, what are you seeing? And then we get into the luxury and then all the other areas, correct?
Yes, yeah. Let's do that. Yeah.
Okay. Follow your flow.
Okay, let me share my screen. There we go. Are we sharing? Do you see it?
I think you've seen, yes.
Okay. Perfect. So we're going to talk about Orange County overall, and I just pulled a couple of statistics to help people understand kind of the makeup of Orange County right now in the last 60 days. We'll start there. So what I've pulled together is the number of active listings and the number of closed sales. And we're just looking at trends, right? So just to see what's happening in the market. So we can see that since November to January, active listings have come down a little bit. They're trending a little downward. And this is very typical for this time of year. Towards December, there is a little bit of uptick in closed sales. And then in January, it kind of falls off a little bit. But that doesn't mean there isn't activity happening within the market and that agents and buyers and sellers are all kind of trying to figure out what's happening here.
I see that inventory decreased in January. Is this something that you see as a trend, or this is something that you see historically happening every June?
Yes, historically for sure. When I look back at 10, 15 years, January is always the lowest month when it comes to inventory. and sales and all of that stuff. It is the natural progression of how the ebb and flow of activity. There's usually a ramp up. Well, as the year ends, there's usually, that last spurt to get everything in before the end of year. And then January just kind of everyone's licking their wounds, I think, and everyone's just recuperating and gearing up towards those beautiful spring months.
Christmas budget and the holes and the pockets.
Yeah, for sure, for sure. But yeah, I think it's very normal what we're seeing right now. So, that's kind of where we're at. But so in here for this chart, this shows kind of the makeup of Orange County. This is the number of sales by price band. So you can see that a lot of the activity is really within that $300,000 to $700,000 mark. That's where a majority of the activity, obviously Orange County, we've got it all. So it's all here, but this is kind of where everybody is playing around in.
So wait, the number of sales, the highest number of sales is between 400 and 500, right? So the sweet spot is about 450, I'm thinking, right?
Yes, yeah, this is just where a lot of the volume is.
Sale. Gotcha. So the average price is about 450.
Yeah. And then, and by the way, I forgot to say that when I look at Orange County, I'm looking at single family, 1 to 4 units, condos, townhomes. This is all the product is what these charts are showing us. And this one is price ratio by price band. So what that means is the sales price to list price ratio. It just shows us what percentage above or below the original list price did a home sell for. So what this is showing us is that in this range, that 300 to 700, it's roughly 4 or 5% lower than what it originally sold for. Obviously, as you can see, there are some outliers, like, under 100,000, the investors. So anybody looking for a deal, they're going to snag it. And
most of these are cash deals anyway, so these are like heavily investor saturated market. But then everything between 3 and 700, if the people are seeing the price, they can expect to be negotiating within 5%, correct?
Yes, and this is over all the products. So as we go through some of the different quadrants that I've kind of separated for us for the purpose of this overview, you will see that price changes as we move into the different locations.
Perfect.
Not the price, but the price ratio changes. This one is days on market and months of inventory. So days on market means how many days a property has been on the MLS or Zillow or Realtor.com, wherever you get your information. So we can see here that over the last 60 days, the days on market is trending upwards. So that's saying that homes are sitting on the market a little bit longer, not by a much. This is 37 in December and 47, so 10 more days, right? But the other telling factor here is the months of inventory. So that means how many months is it going to take to sell all of the active listings on the market today? And right now we're seeing 6 months. As
6 months. What does it mean, 6 months of inventory? What kind of market does it signal to us?
Yes, that really signals actually a balanced market. So it isn't anything like the 2020 and 2022 where things were just flying off the shelves. So this is kind of saying, hey, this is a balanced market. There's still activity. It's not too high, right? It's not saying that things are just sitting there and we just have so much. This is saying that the market is really in balance and that there are homes to be sold and there are buyers that are looking. So it's not doomsday, like there are some naysayers out there, but this just isn't what we've seen over the last 5 years, but it doesn't mean that it's bad. It just means things are in balance and things are stable.
I think like when you're watching the news and then even on CNBC and then on the trusted sources, you see headlines that say the prices are crashing, everything is tumbling down, and then it's a doom and gloom and everything. It's so important to look deeper into the numbers and understand those numbers, because even when I see foreclosures are triple the size of like last year. But if we look at the actual numbers, yeah, it went from point something something to point something something, which is still super historically low.
Yes, and when we hear about national news and everyone, because that's what we listen to, right? I mean, the national news says something different, and what can real estate is so location specific that what is happening nationally or the national numbers may not be what's happening in our own backyards. So we just have to be curious investigators and find out as much data as possible in our own backyard so that we can make smart decisions.
Oh, that's beautifully said. So 6 months is more like a equilibrium of the even both the supply and demand, which means that sellers can sell, buyers finally are able to negotiate and then actually get some kind of a deal. And I think it's a lot healthier for the market right now because whatever we had in COVID was absolutely like a frenzy of real estate demand. And I think it put a lot of buyers out of their affordability zone. And I don't think it was like healthy for us as a nation. I think that the market as of today is actually the market that we used to see before COVID based on the rates and
Absolutely.
equilibrium inventory. So do you also see that we're getting into this healthy zone of market relationships?
I mean, yeah, I hesitate using the word healthy, but I do think that it is. I do think that we are healthier. Yes. Oh my gosh, compared to the 2020s. Yes, because when I look historically in Orlando in general, Orange County, all of Central Florida, the same story is happening, and we are seeing very similar metrics of things in balance and listings and the number of listings, the number of solds. Those are pre 2018. They're like 2016. Like our interest rate is much different today than it was in 2016, but the other metrics are very similar. So to me and to you, I think that when we see that, we say, okay, it's looking more normal, right? Like normal. It may not be our new normal. We don't know what the future holds, but all we can do is, yeah, all we can do is look at the metrics of what's happening in today's market and say, okay, it's not crazy. I mean, it's wacko, but a different kind of wacko. All right, so let's see what else I have. Oh, so this is Orange County in general, just to kind of sum it up. It's active, it's correcting, it's not tanking, homes are selling, negotiation is definitely possible, it's back on the table. Days on market matter again. And so this combination tells us we're in a market where you have to price accurately. Pricing accuracy is more important than just being optimistic. So affordability here is the primary pressure point. Buyers don't have as much room to stretch, so they're far less forgiving when pricing is off. They're really out for blood. And they should be, because affordability is a problem. So if you're an agent advising sellers, accuracy in pricing before you hit the market is super important. And if you're advising buyers, they can gain leverage in areas where in locations where they can walk away. Maybe there's more inventory somewhere, or they still have options.
So buyers have more leverage now. For sellers, agents, I think there are still agents who take the listings at whatever price the seller wants to get, just because the business volume is not as big as it was 4 or 5 years ago, and there's everybody's trying to survive at this current economy. And I think it's kind of a like very thin line to walk, because as we know, the first 2 weeks bring the most activity, and if the listing is overpriced, you're kind of losing momentum on this one.
Yeah, I mean, let's be honest. The sellers today are truly still wanting the most for their home. That is never going to change, but these sellers are still wanting 2022 numbers, and this is not that market anymore. And so the agents who are kind of letting their clients dictate the listing price they're getting caught in that days on market, right? They're sitting longer because buyers, like we just said, they're out for blood, they're out for a deal. The operative word here is they're out there. There are buyers who are out there and ready, but they need some kind of negotiation, some kind of concession. They need reality, right? So there's activity to have. So if you're a seller and or you're an agent representing a seller, you really do need to have that conversation of strategic pricing and doing it in a way that is accurate and reaching out to people in their circle, like you and me, to help them and guide them as to where this range is, what makes sense in today's market.
I think actually today's market requires for realtors to use creative strategies working with sellers, which means bringing other experts from other areas, trying to determine the price. First of all, they can use you for pre-listing appraisals, correct?
Yes.
And I usually offer right now to my realtor partners, not pre-listing. I mean, I can also offer pre-listing consultations on the numbers side, but if the property has been sitting in the market for a certain amount of days, like let's say over 60, we can sit down with the seller, we can go over their cash out of pocket that they already occurred, and then the possible concessions that they can give out versus the expenses they will still occur in the future. And these numbers, when they are presented in the chart and when they actually are looking at how much they already lost and how much they potentially still can lose, that speaks volumes to them because it removes the emotional component from the negotiation. And we're just talking bare numbers. Why we love numbers so much.
Yeah. Yes. And real estate is
right.
yes, and real estate, as everyone knows, is a very emotional journey. So, as agents out there, the most important thing they can do to guide their clients through this journey on both sides is to really center themselves within the data to help, flow the journey to close. So,
they might even bring the CPA or an accountant to walk the seller over. It's not the goal just to get the maximum price. The goal is to get the maximum net, right? And maximum net will not be just after the house is sold, but at the end of the year when they pay their taxes, which if they sell higher, they will pay higher capital gains and they will like higher amount for capital gains, and they will possibly even be kicked into a new tax bracket. And those things they also have to be considered. And that might just be speaking right into a seller's heart.
Yes, 100%. Money talks. Money hurts. Speaking of money, let's talk about the luxury market.
Sorry, yeah, that's like a difficult one to figure out. So your insights appreciated.
Yeah, no, it is. So yeah, the luxury market. This is for homes that are over the $1 million mark. That's kind of how I pulled this information. And it is within the last 30 days. So when we isolate the luxury market, it happens, like we said, it's very location specific. So Dr. Phillips area, Windermere, Bay Hill, Lake Butler area. This is where homes like pools are standard, right? But water views are not. So what's really moving here are well-positioned homes in those prime areas, especially homes with water views. I think when I looked at the active listings in the last 30 days, I think like 34% of them had water views, and they were commanding a premium in, the difference between water view and not water view. I think like 100.
How much can they charge in the premium, like for the water view?
I mean, as an appraiser, we always hesitate to give any numbers because everything changes per home. But what I was seeing in the data was like $100,000 difference. Now, like I said, don't quote me on that because it could be different. It could be more or it could be less depending on the property. But what's stalling in this area is non-water homes that are priced as if they are on water, right? They want to be in the same lane. They think they're similar, and those homes are sitting. Homes in this area are taking about 50 days on the market to get to pending, and they are selling at 5% below list price. So there's a lot of negotiation happening. And what I can't tell is whether either the sellers are more hopeful and optimistic that they can, have this higher price, and then they're sitting on market and then they're negotiating down. But that's kind of what the sold data is telling me, that homes are selling 5% below list. So if you're an agent and you have a listing that is in this luxury market segment and you're going 30 to 45 days without any traction, that's the market telling you that pricing is an issue and needs to be reassessed. Because buyers in this segment, they segment themselves by the location first, and then the amenities like water, and then by condition.
And everything. So if you're a homeowner who is currently on the market with the home and you're watching this episode, you're on the market for more than 45 days, you might want to discuss with the agent the pricing and then possibly choose a different strategy. If you're a home buyer looking to buy in Dr. Phillips or Windermere, which many people come here for schools and for other perks and lifestyle. So if you're a buyer and you see the property that's sitting in the market for more than 50 days, there's the opportunity to negotiate.
Yes, absolutely. So moving on, we talked about some of the segments. I broke it out into different areas, and I'm calling it the Northwest Quad, but it's really areas.
Talking about Apopka, and then what is it, like Ocoee, Winter Garden, all these areas, right?
Yes, yeah. So it's the north of Colonial, west of I-4 for people who aren't familiar with the area. Yes, it's like Winter Garden, Ocoee. They can look up those locations, and Apopka as well. So this area is very. I'm sorry.
Claremont there also?
Claremont is in Lake County. So for this purpose, we focused on Orange County, but Winter Garden is probably the closest. Is the most west that way. To Claremont. So in the Northwest quadrant, there's a lot of volume here. The area is dominated by clean, functional homes, many of them built within the last 25 years. Buyers here are comparison shopping aggressively. What's moving here are homes that are priced along with their competition. And so the sales price
would be the home builders, right? Because there's a lot of construction going on there.
Yes, you're right. So the homes that are moving, they're priced competitively, which means not like new construction. So again, pricing accuracy is super important here. And the ones that aren't being priced correctly, that sales to list price ratio is within 1% to 2%. So in this specific area of Orange County, it seems like because there's so much volume that the pricing is pretty accurate here, for resale homes versus construction. So it seems like in this quadrant, everyone knows their lane. Not everybody, but most. So what is stalling here are homes priced like lifestyle products. And what we mean by that is just there are a lot of amenities around here, but again, there's so much to choose from that a lot of those amenities kind of are nice things to have. They're not necessarily what you can sell at a premium for. Does that make sense? So
like if let's say the property is sitting like backyard is looking out at the West Orange Trail, and you think you're going to get an enthusiastic biker who will pay premium on the property for that, most likely it's not going to happen.
Not in today's market.
Yeah.
I think in a different timeline, in a different point in time, they might be able to in a different type of market. But in today's market, with what we're seeing in the volume and the sale price to list price ratio and everyone, I'm not really seeing that.
There's a lot of choice.
There's a lot of choices. Yeah. So the trigger here for agents, at least, is, if you're getting showings without any offers, that is really market. You're getting rejected by the market. So definitely exploring repricing or strategizing with your client and figuring out where that price needs to be.
Concessions, buy downs, all kinds of things that are available. Yes.
Yes, you need to get creative. Yeah. In the northeast quad, so now we're going east of I-4 and north of US 50. These are areas like Baldwin Park, Winter Park. This area behaves very differently. So this is not like the one we just went over. These are well located homes that are priced to neighborhood norms. So location is the primary driver here.
Maitland in here also?
Parts of Maitland, yes, because I think isn't Maitland also Seminole County? I'm not 100% sure.
I just think they kind of share the same vibe, like Maitland, Baldwin.
They do, yeah. Yeah. I mean, even in Seminole County, yes. That it's still in that quadrant and still very much behaves differently than other markets. What's stalling here are homes that are priced like new construction when they're not, because generally in this area, homes are a little bit older as well. And the days on market is about 70 days on market is common in this area from what we've seen in the last, 30 to 60 days. So that reflects more selectivity of the buyers. They want the location and they're looking for the right thing in the right location. So that means that people are taking a little bit longer, to make that decision. They want to make sure it's right.
Okay. And it's probably not that much inventory like in, let's say, in Apopka. There's less inventory, but people are still willing to wait until they find the right.
Correct. And some sellers are going to panic. So they're going to be like, oh my gosh, we've been on the market for 60, 70 days. So the agents in this market, they need to be saying, hey, this is normal. This market pocket behaves a little differently. And, don't become so emotional over the days on market here. You can still get a deal done. So the time thing is normal. The risk here is not being aligned with the neighborhood value, really. So that's the big risk here. But that is the Northeast quad.
All right. Where would you like to go next?
Southeast, let's just go clockwise, I guess. So the Southeast is areas like Conway, Edgewater.
Airport? MCO?
Yes, yep, down near the airport area as well. And this area is more affordability driven. So when I looked at the last 30 days, there were more homes that went pending than came on market as new listings. So that tells me that demand is absorbing supply quickly here. The median pricing in this area was in the low 400s. Much shorter days on market, and the sale price to list price ratio was about 2%. So that's really not far off from the listing price. That's in a normal, concession amount. What's moving here are homes that are priced within payment tolerance, right? So when the math works, the math is mathing. When everything is working out, homes are selling, and there's a lot of pending in this area right now. What's stalling here is homes that drift outside that affordability. And sometimes when investors come into an area like this and they have so many, not over improvements, but sometimes it could be over improvements when they're really coming in and redoing the home in a way that the market isn't really going to accept or pay a premium for, then they're doing a little bit too much work to it. Does that make sense? People want a turnkey property, but they want it to also be affordable. So I don't think you need like the, marble from Italy.
Well, I think it's very easy to misunderstand the market because generally buyers became more choosier, let's say like this, right? More like pickier with properties, and many investors and even homeowners try to improve and over improve, trying to make their property more attractive. And for you guys, if you're remodeling your property with the idea to increase the market value, I do have a special guide for you that will tell you what items bring you the highest ROI. So you don't do your guessing game and you actually do the things right. And remember that not everything that you improve will give you dollar to dollar value. This is very important to keep in mind. Am I correct, Jessica?
Very important. That is sage advice right there. Sage advice. Download that guide today.
Just comment the word ROI. I will gladly share it with you guys. It's free, no obligations, no strings attached. I just want you to make your educated choices, informed choices. The reason I created this guide because I have a neighbor who laid the floor with marble from Italy, spent $200,000.
Oh, he did really? I just said that as a okay.
That was a Italian marble, and he said he listed his condo for over $1 million. I told him you will never sell it as a good neighbor. And he said, look, I put 200 G's into this floor. I have to sell it. There's no way it wouldn't go. It didn't go.
Oh, that's heartbreaking.
So yeah, I mean, it's okay if you make those improvements because you wanted to live there and enjoy it, but just think you'll never get the money back.
Yeah, not for resale. Speaking of resale, that was a crazy segue, but I, I feel like that's the story in Lake Nona is is resale. Resale is an issue in Lake Nona only because there's so much new construction here. It's heavily influenced by new construction in Lake Nona, and the homes that are
Still like insight into Lake Nona. Lake Nona for few years already it holds the reputation of this hip town for young professionals, professionals in healthcare. They have a VA hospital. They have all kinds of new technologies. I think that they were like inventing the flying taxi and things like that. So it's all like very super trendy. And I think builders got the memo. So they came in and started building and putting on inventory like crazy, and they forgot to build the roads. And that's kind of the story because whenever I go there for open house or to do like any kind of event, I always get stuck in traffic.
yeah, it's tough traffic down there for sure. It is.
So
And
they do the construction and the resale homes, they compete with builders all the time, right?
yes, they do. And I think I've done a lot of pre-listing work in here, and thank goodness because there are really good agents here that are reaching out for help prior to going online. And I think they're learning that that's the way to go because what the optimism is here for these beautiful homes that, you know, people feel like they should be selling for are not. And the other big driver here is that some of these homes are really improved and have a lot of upgrades and updates that are different than the resale homes that were built with builder grade materials. So, you know, like just what came with the floor plan, right? Like just the basics versus those that were built that have beautiful updates and upgrades to the home. Sometimes in that $200,000 range, right? Like, so there is still a premium, if you will, for those upgraded homes, but it's not what it was. So the resale market is tricky here, and it really, you have to look at the details of the home and have that be a factor in your pricing strategy for sure.
I think for appraiser, it's probably the most difficult market to do your appraisals because it's really like a seller's limbo in terms of like how do you really structure your pricing when there's so much new construction and there are so many different upgrades and updates and you're competing against every single one.
Yeah, and really what I personally lean on here is the sold, right? What has sold. And when I look at what has sold, I don't just look at a number and look at the date and go, oh, this sold then. I look at the pictures in the listing. If there were any kind of wonky concessions that were listed on the MLS, like I'll reach out to that agent and find out like what was the story here? Why did this sell lower? I look at the listing history and I look at how many price reductions it has, you know, because the sold data shows us where buyers made the decision, right? Then I look at pendings and listings and I do the same thing. I look at, you know, the photos, the levels of upgrades. I look at the listing history here and I really try to dig into the why story of what are buyers today looking at. Why are they resisting this price? What's going on? And that's why a lot of looking at those pending and listings do tell the story way ahead of headlines because that is what buyers are actually telling us by not buying it. So it's it's very tough. It's a tough little market right now, but things are still happening. I mean, you know, there's still activity. Just has to be accurate.
So for this market, if you guys listing agents in this market, or if you're sellers in this market, please contact Jessica, because you need this advice before you list your home. You really don't want to lose your momentum when you're going out on the market, because these first 2 weeks are crucial if you start losing traffic just because you're overpriced.
100%. And nobody wants to leave money on the table. And that's why that's really the gist of it is you don't want to overprice and sit on market and then kick yourself in the butt later down the road, you know? It's so much better to know ahead of time and go in with the intention that you are priced where buyers are actively looking. So, yeah.
I just think that it's a risk if you overprice in this market. You lose momentum, and in the end, you might sell it for even lower than if you would originally go in. But you would sell lower a lot later in the day while still incurring costs for maintenance, possibly mortgage, HOAs, property taxes, and everything else. So you actually incur higher loss, not just in the price reduction. That could be probably more like less if you priced it correctly.
Yeah, absolutely. So with that, I think that
Yeah, you're running ahead of me.
I'm sorry.
What we should be looking out for, and look at you, you're ready. So for the next 30 days, because we are going to be putting out this episode once a month. So next episode will be for March 2026. So before the next episode comes out, what should we be on the lookout for?
Yes. Well, you should definitely watch the pendings and listings that are happening, like we just said, because you're trying to find out what buyers are doing right now. Keep an eye on the time on market, understand, like you offered, the creative ways to negotiate once you're getting under contract, and really having early clarity before it even hits the market definitely protects your leverage afterwards. So that's the key here.
Preparation that the agents can do before they list on the market. These are all like the tools in the toolbox, these are all the gear that we're coming into the market with to actually get the best for our sellers in the case of listing agent.
Right.
Yeah. So one more thing that I want to announce, both me and Jessica want to announce. So guys, this is our commitment to put out these episodes monthly, but also once a month, we're going to be choosing one of the areas of Orlando, just one, and we're going to go hyper nuclear just on that area. We will break down the market for you. So for the month of February, what did we choose, Jessica?
Apopka.
So in the month of February, we'll be talking about Apopka, Florida. This is a very interesting market. If you are listing there, if you are the homeowner who's putting the home on the market, if you're a home buyer there, which probably there'll be many of you watching this video, you want to see that episode. So I highly suggest all of you to subscribe to this channel. I do have a lot of educational videos on mortgage here. I know nobody watches those until they actually go under contract, because it's a boring. I'm not dancing with cats on those videos. I'm just giving you the knowledge, and nobody really cares about that, and that's all right. It's normal. But aside from that, we're going to put out this high quality content for you guys. Subscribe to the channel so you don't miss it, because if you're any active in this market today in Central Florida, you want to know this ahead of time.
Absolutely.
Jessica, I thank you for joining me today, and I'm going to post your contacts in description so people can actually reach out to you. Listing agents can reach out to you, sellers can reach out to you. Just give me an idea, how much is the appraisal cost if you do pre-listing appraisals? What would that actually be out of pocket for the people?
Yeah, we have a couple of options. If the property needs an in-person inspection, so if it's a two-story property, because those can be different than what's on public record. Sometimes the square footage is off on those. But if it's just me coming out and doing a in-person inspection and then analyzing the market and giving a price, a value range, then that is generally $500. It does depend on the complexity. So if you are sitting on 5 acres or your oceanfront, that requires different level of analysis. So those prices would go up from there. But the other option we have that's very economical is if like, let's say it's already on the market, right? It's a stalled listing. So there are photos I can look at, there's public records I can look at. That means I don't have to physically come to the property. So that does save a little bit of money. So those are called desktop appraisal, and those are 300. It's the same level of analysis that the analysis doesn't change. You're still getting all of that. It's just, time is valuable. So if we can get the photos another way and get some of the information on the condition of the home, that really does provide an economical option for people not having to do the full blown in-person inspection. But if there's any weird things,
Right.
any complexities or quirking things, I need to come out.
Gotcha. But let's say if it's like a regular 3-2 home somewhere in Central Florida, let's say they did not go on the market yet. It's a pre-listing appraisal. Can they just send you photos, and then maybe the agent can do video walkthrough with you, so you don't have to come out? It's gonna cost $300 to the seller, correct?
Yes.
This is an excellent option for you sellers and for you agents who are listing. Talk to your seller about that option. This will save you a lot of stress, anxiety, frustration with each other, and disappointment when the seller will have to actually drop on the pricing.
Absolutely. It's the only way. It's the only way to get it done.
Thank you again today for joining me, guys. Subscribe to the channel. We'll see you with this episode in a month, and then sometime during February we'll drop the episode on Apopka, probably within 2 weeks. Again, subscribe so you don't miss it, and I'll see you soon. Bye bye.